I'm Doris. I'm here to show you about my stock account. Today my stock account has made a loss of $500. The Dow Jones fell 270 points on Wednesday. So first let's take a look at my account. My account has made a loss of $620 in the post-market. Today United Natural Gas continued to make a loss, and it has dropped to $6.31, a loss of 2.77%. SQQQ made a gain of 2.05% to $30.42. The market closed mixed. The Dow Jones Industrial Average closed 0.80% lower, and Nasdaq Composite closed 0.46% lower, and the S&P 500 closed 0.70% lower, and the industries generally closed mixed. Investors continue to wait on the corporate earnings report. The US ADP private employment data for April far exceeded expectations. The Fed raised rates by another 25 basis points and suggested a possible pause. US WTI crude oil futures fell below $70. The Dow fell 270.29 points, or 0.8%. On Wednesday, the Federal Reserve announced the results of its Federal Open Market Committee meeting in May. The Fed announced a 25 basis point rate hike, raising its target range for the federal funds rate to 5.5% to 5.25% of the 10th consecutive rates increase since March last year. The Fed's FOMC statement said, "Members unanimously agreed on the interest rate decision. Inflation is rising, and we are highly concerned about inflation risks." The wording suggesting a further rate rise was removed from the Fed's meeting statement. The statement said the extent of tighter monetary policy depends on the economy. The Federal Reserve said in an FOMC statement that it will keep its balance sheet unchanged, or $60 billion in Treasury and $35 billion in mortgage-backed securities. The Fed's FOMC statement noted strong job growth in recent months, reiterating that the U.S. banking system is sound and resilient, and that economic activity expanded at a more moderate rate in the first quarter. At a press conference later, Fed Chairman Colin Powell said, "No decision to suspend interest rates was made today, and will decide the outcome of interest rates meeting by meeting." Mr. Powell said lower inflation could require a period of below-trend growth and a weaker labor market. He expects the U.S. economy to grow moderately and avoid a recession. Mr. Powell also said that the timely raising of the debt ceiling was critical, with highly uncertain economic consequences without a debt agreement. Goldman Sachs commented, "As we expected, the FOMC sent a clear message, as it indicated a pause in June that it will remain hawkish." Mr. Nike tomorrow said, a prominent analyst at the new Fed news agency said, "The Fed's statement used language roughly similar to the one that ended in 2006, with no clear commitment to suspending interest rate increases by maintaining tighter bias." And Sam Stovall, chief investment strategist at the CFRA Research, says the Fed's statement was basically a hint to markets at a pause in rate hikes. Most important part of the statement was a changing wording. He said that the Fed said they would determine whether interest rates were necessary in the future. And last time they said they expected a further increase to be necessary. Using terms decision instead of expectation basically tells markets that the Fed is now in a pause. Since March, the Fed has raised interest rates 9 times in a row, totaling 475 basis points, the fastest monetary policy tightening in more than 40 years. But inflation was trading at 5% in March, still above its long-term 2% target, according to the latest data from the Labor Department. Michael Gappen, chief economist and the U.S. economist at Bank of America Securities, said, "On the data front, while the inflation slowed in March, there is still a lot of work to be done to get back to the 2% target. I still don't think the Fed will cut rates until March 2024. If the pressure on the financial system eases in the short term, the stronger macroeconomic data will lead the Fed to raise interest rates again after May." Investors have welcomed a batch of late corporate earnings results. Ford Motor Corporation and the Starbucks beat analyst expectations in both revenue and earnings. The other today, including CVS Health, Yum, and Spirit Aerosystems. Oil prices plunged for the second straight day, falling below $70 a barrel in New York on concerns of the Fed raising further interest rates could increase the risk of a recession. The possibility of a U.S. recession allows investors to avoid risky assets and could curb oil demand. Markets still focused on the risks facing regional banks. Continued fears on the spread of the regional banking crisis hit by the market after the First Republic collapse and a subsequent takeover by the JP Morgan. iCapital analyst Anastasia Amoroso said pain still remains across the banking industry. I think the dynamics of the banking sector are really important to the Fed, because remember that at the last Federal Open Committee meeting, Colin Powell really gave us new indicators to see if they will raise interest rates. That is the extent of the credit crunch that is happening in the economy. On the economic data on Wednesday, US ADP private employment, but as small non-farm data was 296,000 in April, the biggest increase since July 2022. Expected 148,000 from 145,000 previously. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.